Market. United Spirits numbers are flashing on your screen. Let's go across and join Ravi Nedungadi for details on those numbers. Ravi, good morning to you. Can you take us through to what extent high molasses prices are affecting your margins and whether you continue to expect that to happen in the next year as well, or the next few quarters as well?
Well, Udayan, I think the quarter four, the molasses prices did soften considerably from the highs of the quarter three. So we have been able to recoup a lot of the margin. We're back to something like a 17-18% EBITDA for the quarter. The outlook for the next couple of quarters, probably raw material prices continuing to rule firm until this year's crushing will begin towards the end of the year in October or so. But certainly the position is far improved from the Q3 mishap that the industry had to face.
Ravi, morning. What kind of visibility do you have for the next financial year? Some analysts believe you should do about 375 crores on a net profit basis for FY10. Is that a target that looks doable?
Mitali, we've consistently not given guidance on numbers, so I would not like to break from that. As you've seen from our results, growths in demand have been very positive. They're coming from all segments of the market, and so we should continue to do well. We are already budgeting, as I said, for a higher raw material cost coming in the 2009-10 than we did for 2008-9. But we still believe that we should have a good year ahead.
Quite a few weeks have passed since we last spoke to you about the Diageo deal, Ravi. Where have you reached on that? Are talks still continuing? Can we expect to hear something in the next 1 month?
Then I can only draw a comparison with the parallel that we did for the strategic investment by Scottish and Newcastle into United Breweries. Those discussions took us totally about 18-19 months to conclude. So, discussions are continuing. We are not in a hurry. We don't want to put some sort of an artificial timeline because it's more important to get this kind of a transaction right when you do it rather than to hurry it through. Particularly since there's no compulsion from any perspective. It is a strategic deal in order to get long-term strategic benefits, and therefore there should be no compulsion to rush through anything.
The group is also seeking shareholder approval, Ravi, to remove the debt on Kingfisher's books, about 12,000 crores. Can you just walk us through whether or not that indeed is going to be the plan of action for removing or clearing off the debt that is on KFA's books, and what the total quantum is right now?
Well, Kingfisher Airlines today has a debt of in the region of about 6,000 crores. And clearly we are committed to bringing in equity over there. There are a number of options, but there are also constraints imposed by the regulations surrounding civil aviation industry. We do hope that these will change shortly. Obviously, the current preoccupation with elections and government formation will take precedence over that. But once those things settle down, we have been assured by government that they will relook at some of these things which are constraining the industry's ability to raise money, particularly from strategic sources, and that's what we would be working towards.
Quick last word, Ravi, on White and Mackay. Is it a drag on your profitability?
No, it isn't. In fact, it has shown a healthy number against last year's profit of about £52 million on a turnover of £164 million. We would have done somewhere close to 57-58 million for the current financial year on a turnover of 176 million. Scotch prices still continue to be firm. From the time that we took over, there is nearly a third appreciation of the value of the inventory that we are carrying. So that's looking good. That was an important strategic decision as well. But even in the short term, it is in no way dilutive to our earnings.
Thanks, Ravi, for joining in this morning. Let's talk soon with more developments if they happen. That's United Spirits with their numbers.